Hi, guys. I hope you're having a wonderful time. This is going to be a very interesting episode. Your host, as usual, Jesse. Joined virtually by a couple of guests, and I will want to start with number one. Rufus, how are you doing?
I'm doing well. I
Yes.
think the markets have been fair this week. So, hi everyone. Rufus Kamau here, markets analyst at FX Pesa.
Yes.
So, hopefully, we are going to have a good session today.
Yeah. Are you in the estates of Limuru, or where are you in this part of Kenya? Or you are having travels,
Yes.
joining virtually like your friend, Mr. Putin?
Yes, I'm in one of the coldest areas in the country, Limuru, yes.
Nice one. Now we will want to cross over. Is it the Atlantic? And all the way from Atlanta. Am I pronouncing it right?
Alana.
Yeah, I guess I will need a couple of hours to get it right. Yours truly, Eddie, maybe you can introduce yourself.
Hey, hello everybody. My name is Eddie, just Eddie on X or Twitter. And happy to be here.
Nice one. In this podcast, we normally try to talk about a lot of things, mostly financial. And I know you are a participant, and we are just just over an hour and a half to US markets open. So maybe you can say, how did you get yourself into this business of following numbers, charts, candlesticks, and withdrawing cash to your account and spending it however you do it?
It's funny enough, it started with crypto back in 2017, the crypto bull market of 2017.
Okay.
I remember it was the first time I saw the app called Robinhood.
Okay.
And I downloaded it, and it was, they had the commission-free trading, and I knew about the stock market. I knew stocks. I knew, you buy, then you hold. I had read a little bit of Warren Buffett style, but I have never actively engaged with markets besides besides standing in line in, I think, 2010 Safaricom IPO for my mom. My mom wanted to buy shares, and she told me to line up for work, or the lines were really long.
Okay.
Don't know if you remember.
Yeah, I remember back in the day.
Yeah, so
everyone was crazy about.
Yeah, so I had to stand in line for the bid. I think by the time I think we got in there, I think the price had already skyrocketed. So she didn't end up buying, because I think they were going for $5 Kenya shillings. But while you're still lining up, there are people in line who are buying the shares for, hey, I will sell you 15 Kenya shillings if you for the price of 5. There are a lot of brokers in the line while you're still online or something. So that was my first experience with stocks, and I kind of had the knowledge but I didn't delve deeper until the crypto craze. And when I got the Robinhood app, the first thing that I thought, hey, there's this thing called ETH. And it seems like it's going up. I'm just going to invest I think by that time, ETH was $100.
Okay.
So I think I'm just going to put $100 and let's see how it goes.
So are you?
And lo and behold, it went all the way to 1,400.
Yeah. So you are part of those Wall Street bets guys on Reddit.
That was in 2020. 2020 GameStop. I did make something. Though I was out of the market for early, because I was like, this doesn't make sense.
Okay.
It's starting to feel like it doesn't make sense. Yeah.
So did you delve into other sectors, given you already have the background in equities from the local markets in Kenya, and now you are where each and every person outside of America is trying to get into the largest stock markets, the New York Stock Exchange. So did you maybe delve into other asset classes within the financial markets?
Yeah, after that, I had a good run, like with I saw that within a couple of weeks, it went all the way to 1,400. And I was like, from 100 to 1,400. This is a good feeling. So I tried to figure out what other ways I can keep doing this. And I got introduced to options. Robinhood then didn't have a limit on how many contracts you can buy when you're trading options. So right now they do have limits based on your leverage. Like they didn't have a leverage limit. I don't know if you've read that story of the kid who killed himself after he traded on Robinhood, and the trade didn't go as he was planning, and he ended up losing like a lot of money. I think he lost $750,000. So yeah, I got introduced to options, and ever since just dealing with options and trading options basically every now and then. So that's how I slowly got into equities and the New York Stock Exchange, just trading options.
Yeah, I'm curious. Before you went for the earth trade, what were you doing as your day job, or what were you engaged in before that?
Before that, I used to work we do computer refurbishing. We refurbish old computers. We get them from companies and refurbish them and then sell them online. Actually, that's part of my day job currently as well. So we have a big warehouse where we get the computers, refurbish them, sell them on Amazon to schools, governments, and different places across America. Yeah. So that's what we do, basically.
Oh, awesome. So from computer refurb to markets.
Yeah. So it's do it during the day, and then how I structure my trades, and go along my day and do the day job. If there's something that I need done or I want it done, if there's a big shipment coming in, I have to, be there.
Nice.
Yeah.
I have a question.
So Jesse, before you got into the markets?
What was I doing?
Yeah.
Studying, being a good boy, going to school every day, not missing one lecture. That is what I was doing. And a little bit of farming, I guess, if that adds some context. I would like to ask Eddie a few things. Maybe you can, I'll take you back a little bit and then we can proceed. You can, for those who are not familiar with options in the market, maybe you can do a brief definition of it, how it works, and more importantly, how did you learn to navigate that sector in a way that you were able to, if not at least be break even, but I'm sure you are profitable now, have it as a second or third income source for yourself?
Options, if you're not familiar with options, you must be familiar with the insurance.
Yes.
The math is pretty similar. Options and insurance. You're paying, let's say you're paying $200 for a premium, or $200 premium for it to be covered for 100,000 coverage, right? So the same way, you have the option, but not the obligation to buy 100 shares. That's one contract, one option contract. You have the option to buy 100 shares at a premium of $2. So it's another way of looking at leverage, basically. It's all leverage. So one contract can buy 100 shares of the underlying asset. So that's as simple as I can get explaining options.
No worries at all. And how did you learn to navigate in a way that your risk management is good? What were the first options you sort of bought at the time or got involved with at the time?
At the time, the first ones that I got were the cheap ones. You live, you learn. So the first few options, I went for the low liquidity. What are they called? Penny stocks. That were listed on Robinhood. That's where I started. So I was looking for something that is like below like $5, and then I'll be like, I can buy 10 contracts. Then I buy like 10 contracts, and then you wonder why you keep losing money even if the stock is going up. And now you start learning about things like delta, gamma, and everything else that goes into theta, especially theta, that goes into the math that goes into the option itself. You can be losing money even if the option is going in your direction because of the underlying math. Yeah, so that's how I slowly got introduced, and I was like, okay, I think I have to learn more about this. And I realized I was doing it wrong. You should go for something that has volume and volatility, because options thrive well in volatile environments. So yeah, you learn YouTube tutorials, take online courses, and day by day, you live, you learn.
Yeah.
Interesting.
Go ahead, Rufus.
A quick one. Are you trading zero-day expiry options?
Only only when there is something like some news happening.
Yeah. So
only when there is news happening.
Would you advise a beginner to try that?
No, no, not at all. No. Jesus, no. I mean, if you have a lot of money and you want to donate some to the market, then well ahead, There's always that graph of F around and find out.
Yeah.
Yeah, you have that option.
Yeah, to our listeners, basically zero-day trading options are the most volatile ones. They expire within the day. So in that case, they can get worthless real fast. But at the same time, they represent some good opportunities if you know what you're doing.
They only work best on trend days.
So, Eddie, equivalent of Robinhood in Kenya is definitely FX Pesa on the equity app. And I don't know if you have ever been involved within the futures market.
Yes, this year that's all I have been working on, actually, the futures markets. That's what I got this thing where I started noticing many prop firms coming around, and I was like, okay, I have to test these things out. So I started testing different prop firms. I think I've tested 20 so far, different prop firms, and the result is scary because it's according to my result, my style of trading and all, it doesn't work for me. But the futures prop firms do work for me because they are different. They are a little bit different. But everything else, I'm like,
Is it because of the leverage or the rules within the prop fund, like the drawdown limits, the maximum lot size you can use, the number of trades you can take? Is that something that maybe has hindered how you strategize, or you are, how do I put it, jump off the cliff and see?
For me, it's the whole idea of what you're selling. You're selling me a free product. You've packaged it in a way that, let's say TradingView has a free account that you, what are they called? The the ones that you don't actually, you're not in the actual live market. What is that account called?
Demo
account. Yeah, you're selling me a demo account with the promise of making this money. And this money that you're selling it to me, it's money that I can put in an actual account and watch it, and do some actual trading with it. But since the dream that you're selling me is instead of trading your meager $100, you can trade 50,000 and probably make 200,000. I mean, if you're not making money with consistent returns with your $100, you're not gonna make money with $50,000. It doesn't. That's my issue. The dream that is being sold is totally wrong. Like, if you want a demo account, there are free options. Just roll on the demo account and trade as long as you can until you're bored. And when you're bored and you're making consistent returns, then that's the time that you transition to a live account.
Interesting.
Awesome.
But yeah, sorry.
I think we had an episode where we covered prop firms. So I think it mirrors what you're saying, that if you're looking to, let's say, manage 50,000, 100,000, or whatever the amount the prop firm is offering, then it makes more sense to first of all work on yourself and make sure that you have that skill. So if you are consistently making small, consistent profits on your small account, then you might consider going for a challenge to scale.
Yeah. Yeah, like I have tested, I think 20 so far, and of the 20, only 3, and all of them are futures that I've been able to pass and be funded. And I'm like, what happened with these other ones? These other ones, it was problems with slippage, it was problems with spread, it was all other problems that, that may fit different people's lifestyles. So instead of blowing up these accounts and then repurchasing them, just use the demo until you're bored. And when you're bored and you're making, let's say, consistent, 2% a day or 2% a week, that's income that you didn't have. Or it's still income, the demo, and you're bored of making 2%, but that 2%, if you put your real money in it, it will compound. Because they say, I always think the 8th wonder of the world is compound interest, and you can't go against. If you compound your gains slowly by slowly, you'll get there. Yeah.
Awesome. So another one. After you've done all this trading, and you mentioned that you also do business in refurbishing. Where do you keep the winnings?
I do. I am a sucker for compound interest. So one, I would look for anything. There's stuff that we call the target funds. There are some target funds that you're looking at that, I think Vanguard has a target fund. I use the Fidelity target fund. It's by 2030. What is the goal? By 2030, I want these, I probably want 100,000. So to get to 100,000, how much do I need to be contributing every month, and push it towards that fund? The other one is basically cash treasuries. It's tax free, so wouldn't say no to see 4%, 5% big cash. So the winnings are more conservative. I'm more on the very conservative side. I'm like, hey, I just want compounding interest on this money. So yeah, money market, and I think 80% of my portfolio is just very conservative. It's very, very long term.
Yeah, let's bring the conversation to our listeners. So I'm assuming that a majority of the listeners for British Banter podcast are Kenyans. Now we have a big community in Uganda. So you mind explaining what Target Fund is and what it does?
A target fund is similar to, let's say, you're saving up for a trip to go to wherever, to Mombasa, for instance. How much do you need for the whole trip? You need 5,000, 5,000 Kenya shillings or $5,000, for instance. How much do you earn? So you find ways of allocating what you earn into that particular fund. And then the fund also has its, since the money is not just sitting there, it's earning some, returns because they are actively trading it. And I think I saw an app that does something similar to that. I think it's called Ndovu or something in Kenya. Yeah. But they set you a goal and the target, and then you build towards that. They tell you all you have to do is probably get to 3,000, and probably with your expected returns by when you want to travel, you should hit your target. So that's what target fund looks like essentially.
Awesome. All right. I think it's time we bring the conversation to the markets. So
Rufus.
This was coming. Yes.
Yeah. It's actually true. And I'll stick with the treasuries for a bit. Now, over the last couple of days, I'm sure, Eddie, you've seen the bond yields are going above 5%. We have had S&P just yesterday downgrade a couple of banks in terms from to negative, and of course the banking crisis in US. Given you are trading in a different subsector in the market, how is the volatility there, and how do you adjust your strategy to accommodate all these, some positive, some negative market sentiments?
I'll talk from a personal point, and it's I have a target in mind. And if I reach that target on the first day of the year, let's say for the year, I'm like, I want to get to 20%. I want to beat S&P. And if I hit 10%, then I'm done. Like the rest of the money just goes into cash, treasuries. Then it can start earning interest and all that kind of stuff. So I think if you think about the demand and supply, the reason why this is my own thinking. Demand and supply. So profit taking has already begun with the QQQ and the SPY, the big companies. So profit taking has already, and that money has to go somewhere. Where is the safest place to put that money until there is some sense of direction? So that goes into treasury. So there's demand for treasuries. So that keeps pushing treasuries up. So most of the funds are, hey, I just want a 6-month outlook. It's August. We gotta get ready for Santa rally. So hey, just push it into a 3-month, get that 5%, and then by the time it's Q3 earnings end, then the Q4 rally begins, because Q4 is where money is made. Basically, in the S&P. So, you look at that and you're like, okay, some are choosing 3 months, some are choosing 6 months from now. So it's all, when money is leaving one area, it's being directed to another area, because it can just sit in the funds accounts just like that. It has to be invested somewhere. So most of it is going to the treasuries and stuff. Did I answer your question?
Yeah, to some degree. So all these other macro factors do not really impact how you approach your, your investments. we have had sort of elevated inflation. I'm sure you feel it given we read all the CPI data, but you are the one who bears the brunt of it. Should the inflation go above 6%, now that is coming down to around 3, I think from the last print around 3.1. And we are going to get PMI data in the perhaps in under an hour or so. How is the general sentiment? And okay, so last week, I think the measure of how US is growing is by how many people pay for Taylor Swift concerts. And I think right now she has gone overseas, and I'm talking like I'm there. She's around Europe, I think. So now consumer spending within America and EU as an options trader, does it have a direct impact on the price movements or volumes, or it is, as you have said, you just work with your percentage for the year?
It works as a gauge, basically. You have to think about this is how I view the market. It's a living, breathing organism, basically. So between 2010 and 2020, that was 10 years of low interest rate, basically. And then we have the pandemic and rates still go below interest rate, and we have this huge helicopter money just flew into the economy. And now the interest rates are going up, and my thinking is that now it's time to contract the economy, and contracting the economy. This decade, for the next 10 years, it's probably going to be high interest environment. And even if they cut, they're not going to cut all the way back to zero. They're going to cut probably, 3 steps forward, 2 steps back. Keep it at that, and the markets will respond the way they will respond. So I look at it as okay, consumers are spending. How are they spending? There's still money. Jobs are still there. Most of the people we have people that are warehouses that we still employ. We still haven't cut. The market, the economy seems very resilient, surprisingly, and this has surprised me greatly because I was one of the people who were like, okay, this might not work out, but until I realized that there is a lot of money into people's savings, and also the option of buy now, pay later has even creeped into the gas station, where you can buy gas and pay later. Even into clubs, you can party now and pay later.
What
options? So yeah, it's crazy out here.
Yeah, that will
Just
never. Sorry?
You need to get your visa, bana.
Yeah, because if they introduce that one in Kenya, I think
Sherehe has to go on.
Yeah, if they introduce that, some clubs will go bankrupt because people will go to Mombasa, do that buy now, pay later, and they'll never go back to Mombasa. So very risky business arrangement there about. But yeah, Rufus, I agree. I need to get a visa.
Here they catch you. They catch you really well. They'll garnish your paycheck real quick.
Yeah. About that, I've been seeing two contracting policies. Well, one side, the Fed has been raising interest rates, which has the overall effect of slowing down the economy. I think on the fiscal side, Biden has been quite spendthrift. So there's still a lot more money that is being pumped into the US economy compared to how much is moving out through the Fed tightening. Yeah.
There's always conflict between the fiscal policy and the monetary policy. There's always a war between the Fed and the Treasury. There's always that conflict because the Fed is basically in charge of it's the central banks, the overnight lending rate. That's their thing, and banks have to what is the rate for banks? But for Biden, the fiscal policy is more about the people. What do we want the people? The votes. Let me just be open. It's more about the votes. So you have like a 4-year plan. You have to come up with a 4-year plan, and you have to work with your treasury on the 4-year plan. This is the plan that we have, and you work with your treasury, and your treasury, has to agree or disagree based on the expected taxations and a lot of dynamics that come along. But all these that Biden has been spending is part of the treasury money. Remember, the infrastructure bill that they signed, I think they called it something different. Remember, it was, I think, 3 trillion initially.
Yes, I remember it.
They started, it was a 3 trillion budget, and then they started slashing, and then eventually I think they got to was it 1.2 or 1.9? Can't remember the numbers. Don't quote me. Maybe you can reference the data later.
I also remember the Inflation Reduction Act, which basically brought even more spending.
Yeah. So these, I mean, 2020, during the pandemic, they printed a lot of money. There was a lot of money that was printed. Besides what was given to the people, even the government itself, there was a lot of money that was in, not only in circulation, but was just sitting there that needs to be in circulation. And that's what Biden and the government, the Treasury now is working to ensure that it's in circulation to keep GDP and growth going forward for the votes,
Yeah, interesting that you mentioned a 4-year plan election. And I think today being 23rd of August, I believe we are having is it the first Republican primary debates, eh? What is the political, who is the leading candidate between both aisles? And based on some of the policies you have seen, I know in Atlanta, it's one of the, contested zones. I think last time Raphael Warnock was one of the senators who I think the Democrats hoped would give them the majority. Actually gave them the majority. How is the political scenario at the moment, like as we head to the 2024 elections?
Wow, now when you start talking about politics, it might be another podcast. But yeah, right now Trump is leading by a huge margin on the Republican side, and part of it is he's really popular amongst people, and very, very popular amongst. Remember, he lost with 70 million votes. He lost with was it 72, 70, at least 70 million votes. Yes. So those 70 million people are still there. Those are still votes that can, outbid Biden. I think Biden won 74, 70. Can't remember the exact numbers, but it was above 70 million votes. So yeah, that's a huge number. And so he's leading, and he refused to attend the debate because he says it's child's play. He doesn't. He's already leading, so he doesn't need a platform. He already has a platform, but he will be doing an interview with Tucker Carlson on X later tonight after the debate, after they're done arguing. His main problem is the cases that are just popping up different places, and he's using the campaign money to pay for the cases. So that might run out real quick before the election. Not unless how I'm curious to see how people keep pushing. How far he can go without running out, running out of money. How people can people afford to take him all the way to the presidency, the presidential election? then when he's president, then he can pardon himself and do some other things.
So
for trade, I like Trump. He was pretty much impactful. Whenever he would say something, tweet something, then would get some good signals in the market. This year, I don't think it's the same, this cycle. The current president, if Biden is communicating something, it often has less impact compared to what you are experiencing with Trump.
Trump is volatile. Trump is one day you out of nowhere, hey, Sweden. Well, what did Sweden do? You can imagine. You can imagine holding something, holding one of the CFDs in Sweden or something, and all of a sudden, Sweden.
Yeah. So you can imagine holding onto a stock and given two choices: either Trump talks about it, or Jim Cramer.
Yeah, exactly.
Yeah, quite volatile.
Yeah, that's a Mexican standoff.
Yeah, he's a volatile character, and the thing with the Republican presidents is they tend to be markets friendly. They tend to be capitalism friendly. Let me just say capitalism friendly. We don't care about climate change. We just want to dig more oil and gas. We'll do all the kind of exploration. Oh, you want these green movements? That's woke. We don't want that. So let the business run. Let everybody, make your money wherever you can. So they tend to be market friendly.
Do you expect,
especially in commodities?
Do you expect Biden to, live up to the next 5 years? Should he be re-elected next year?
No. First of all, I don't know why he's running. There are better options, but my conspiratorial mind is things that he gets elected, serves 2 years, and then Kamala takes over the remainder of the term, and that gives her a chance to maybe open the door for the first woman president in her run, maybe 2020 seats.
Okay.
Yeah. So that is my. If I was a strategist, if I was a strategist, that would be the strategy.
A nice one.
All right. The big elephant in the room, CRE, commercial real estate.
Yeah.
How is it in your area?
Funny enough, we just signed a lease, and guess what? The rents have gone up 105%. 105%. I wish I don't have it in the car, but yeah, it went up with 105%. The lease of the warehouse where we are working in. So it's all the costs are being pushed down to the consumer. The consumer, at the end of the day, is the determinant of how this is going to go. If the consumer has money, then we'll push the cost to the consumer. Like right now, the rents have gone up by 105%. So, and 105%, and every year there is a 4% inflation adjustment increase every year for the duration of the lease. So it's so as what are we supposed to do? We push the cost to the consumer, the person who's buying, because they have money. And we want that money, and that money, how money circulates. So at the end of the day, it's the person who's buying. But the only thing that is really struggling is the office space. Office space are the rates for office spaces doing really bad, but conventional warehouses, multifamily, everything else is on high demand, surprisingly. I guess people are betting that, hey, we can buy now, refinance later, because there's always that option of refinancing when rates are low. And with housing, you locked in a 2% mortgage rate, and right now mortgage rates are ranging between 8 and 9%. So nobody wants to sell. So the only people who are benefiting is that there is low supply, there is a high demand for first-time home buyers and something like that. And also there is also something that is going on in America currently, which is called the wealth transfer, where the boomers are finally retiring, and the Gen Z slowly taking up, some of the inheritances and taking up all the money. So with high interest, that's what that money. That's why I started by saying that the market is a living and breathing organism. It breathes in, it breathes out. And right now it's breathing in. And by breathing in, it's just sucking up the liquidity from people. So there's demand and there is a low supply. So the prices they might stay like this for longer.
Yeah.
Interesting. So I've been reading there's this crisis brewing, especially for regional commercial banks that are holding a majority of these mortgages. Do you think the rates of defaults going to accelerate?
Yes and no. For the office space, the people who have office space, they have to think fast, and they have to think of how best they can use that space alternatively. And one thing that I'm noticing nowadays, it's these rent with the WeWork style. Rent an office, and some people are even subdividing it into small warehouse offices where people who sell in their garages, and they have a shop on eBay garage. These two they subdivision. Those I think not in Gara, in downtown Nairobi, Kenya. You used to go buy the movies, and they're like handfuls in one music or something like that. So that is slowly coming in, where people who are selling stuff online can you have one large PO box, and then you have that as your warehouse or your selling point. So those are slowly coming, and that's one reason why I'm saying it may not. The reason is because the interest rate is pretty high, and if you had adjusted mortgage rate, then as rates go up, you're gonna pay out more. So you have to. Then if you're holding those mortgages, then you're losing money. But the federal government created the BTFP program, where they can borrow money but forgo the maturity. They can borrow the money but forgo the maturity.
Okay. Yeah, I remember the BTFP program, and I think it was a genius way of creating a QE infinity, where they'll basically be able to backstop all the deposits from the commercial banks. But I don't think they cover the real estate. So if a commercial bank has a big hole in commercial real estate, it's not covered by the BTFP. And I think that's where the real crisis lies.
could. I don't know the particular details, honestly, about the BTFP program. But what I know is when a crisis starts, is that they will figure out a way, and not unless there is bad. What I know, there is a huge difference between 2007, 2008. There's a huge difference. There are no mortgage-backed security, bad mortgage-backed securities this time around. The only the problem is the interest rate. So they can figure out how to either, solve the crisis or handle the crisis. Then they will try their best. And with the federal government, the federal bank, they might, I don't know, cut rates. I don't know.
So it's still a big question. I personally don't know how it will happen. I know it's a big crisis brewing, especially with the high interest rates. But then it's a wait and see kind of scenario.
Yeah.
Eddie, as we sort of come to a wrap, maybe I'd like you to give us your opinion. I know we started with a little bit of Putin, and we haven't really talked about it. Do you view BRICS as one person who uses dollars every day? Is it under threat, or it's just hot air?
Before I think we started the podcast, we were slowly having this conversation with Rufus, and I was telling him what you see is Russia and Ukraine war, but the real war is between the dollar and commodities. So with Russia and its energy, they're trying. Russia itself is just trying to survive, in the best way possible. That's the best way you think possible. It is very hard to overcome the dollar. It's not easy. It's not something that they can just decide in one sitting and it happens. They can decide to trade amongst themselves, like you don't have to use. You can pay in the yuan. You can pay in this. You can pay in this. You can pay in the ruble. They might decide to do that, and that has no major effect on the dollar. That's basically, I think Kenya did the same thing when they are trying to buy oil. Another thing I don't understand about Kenya is why the shilling keeps going lower and lower and lower, and the dollar is pretty low. Well, what happens because I think slowly, I'm dollar bullish in the short run. What happens when the dollar starts rising and energy starts rising? That's a different tangent. Sorry, I went from Russia.
Yeah.
But if they decide to trade amongst themselves, that's okay. Sorry.
Interesting. I think we'll have to know once the BRICS event or conference ends on Friday.
The most they can come up with is that bilateral agreements of currency agreement. Like we are going to have this constant rate that is not fluctuating based on our economies. Like we're going to use the yuan to trade gas to South Africa, and we are going to use rubles to trade energy, natural gas from Russia to this other place, or we're going to use gold. But at the end of the day, it's really, really hard to get away from the dollar because China has, I think, the second largest holder of treasuries and American debt. So it's something that they just can decide in one sitting.
Interesting. I have one question or two, depending on how you answer them. Now that I know on the side you do photography, maybe once you are away from the church, you have made your 30% beat S&P. What are some of the books that you think have formed your trading style and obviously allowed you to be a better trader over that period of time?
Wow, books
or podcast if you don't read books.
First of all, I don't know. I read a lot of books. Trying to figure out which one is the best. The fundamental is the Mark Douglas one, the psychology of. Is it the psychology of money?
Yeah.
Yes.
Yeah, that's I should. Yeah, that should be like the Bible. You should have it. But at the bottom of the day, the best teacher is the candlesticks. Those things, you look at them, and one thing I usually see like many traders do is move from instrument to instrument to instrument to instrument. Stick to one until you know everything about that thing. Like if you're trading the Euro USD, watch that thing until you know everything about Euro USD. You know how it moves. You understand how it reacts to certain kind of news, or how like you can intuitively, like you're bored of looking at it. And the reason why you're bored is because you're calling all the shots. You're like, okay, it will get here and then go up. Once you master that one instrument, then other instruments get easier. But for new traders, you see them, hey, I'm in Euro USD, I'm in gold, I'm in this. That's gonna bring your rate down. Stick to one until you know everything there is to know about that thing. Then when you know, then you can slowly transition to something else. It might be boring, but boring is good in the long run, because if you're making 2% a day, then $20 a day. But in 20 trading days a month, you're $400 that you didn't have. So be grateful,
Yeah.
And
Rufus, any closing
compound
remarks?
the gain slowly.
Rufus, closing questions or remarks?
Sorry. Yeah, I think it was a pretty good session, and also inspiring to learn about Eddie's journey. So hopefully we'll invite you, Eddie, for another more market-focused episode where we dig deeper into the current trends in the markets and try to explore where the opportunities lie. I think that's one thing you have left out. I would really like to hear your
charts. Those are my favorite things to talk about, charts.
Yeah. Do you think is the newest trend? Like, where is the money headed right now in the markets?
Treasuries.
Interesting. Yeah.
Yeah, treasuries and corporate bonds right now, because right now, the quarters, it's very expensive to borrow money for most of these companies. So the best way for them to raise money is through corporate bonds. So those are on the rise as well. So that's where the money goes.
Oh, nice.
Awesome. Yeah, you have the option of borrowing, let's say 2 billion with an interest rate of 7% or 8%, or you can just sell corporate bonds with a carry of positive carry of 4-5%.
Yeah, it makes a lot of sense.
Yeah.
Yes. If all is going to treasuries, where do you think the Nasdaq is headed? Especially with Nvidia announcing rates later today.
The Nasdaq right now, after the rebalancing, right now it's ranging. We've entered the ranging phase where it's gonna be between 13,000 to 16,000. Not 16,000 to 15,800. So it's gonna be ranging between that until there is some significant news event like, hey, rates are down, so we are we are officially in a recession and goes down below. But we will be ranging for a while.
Interesting. I think that can be a good place to wrap it up. Maybe I think, Eddie, we have a lot to talk about. Probably the next time we speak, we'll have a presidential candidate other than Trump. And of course, maybe you can give yourself a shout out to your social media where people can interact and learn more about what you like to share about, including photography.
I just share what I am doing currently online, but it's just Eddie on X, and I think it's just Eddie on all the social platforms. So it's just Eddie, JUSTEDDIE. And in case you want to learn options or anything, I'm happy to help anybody. In that area. I think Rufus has a Telegram page that every once in a while I pop in.
Yeah.
See something, answer a few questions. Sometimes I find a couple DMs. Where is gold heading? I don't know.
Yeah, I guess for the locals, for those who are not yet out of this African continent, I mean, we do a great job here at FXPesa, so they can get themselves a demo account, spend a lot of boring time analyzing those candlesticks, and I think we'll drop on the description to this podcast, whichever DSP you use, they'll find some an opportunity to create themselves one. And I know by the time we get into the next, we'll have a lot of questions for you, Eddie. It's been a pleasure. I hope by the next time we have this conversation, either of us will be either I'm in Atlanta or you're in Kenya. So
you're very much welcome. And funny enough, I've already tested out FXPesa. And I think I blew 100,000 on it just testing it out. So it's pretty decent.
Yeah, you might want to watch out
for anyone who wants to.
Yeah, you might want to watch out on risk management.
I was testing out because when I test, I'll be testing out on live markets, and I'll be like, hey, I have this, I can blow this. So let's see how. I was basically testing slippage and the spreads, and you have pretty decent spreads on the Nasdaq. I only trade Nasdaq. Most 90% of my time is the Nasdaq and S&P. So I didn't mention that.
Yeah, thank you very much, Eddie.
So you have a decent spread on Nasdaq, not the London time, but the regular New York time. That is decent for anyone who wants to trade the Nasdaq, and you have decent rates, and it's an interesting platform. I have used it, I know it, and my brother uses it actually. I don't know if he's blown up his account yet, but he uses it.
I'll definitely try to get in touch. It's been a pleasure. I want to wish you a very nice day ahead wherever you as you go about your day. And I look forward to having this conversation over maybe a couple of days again.
Anytime. Just reach out if you want to learn about options or anything. If you're in Atlanta, kuja, karibu sana.
Thank you. Rufus, good evening. Adios.
Yeah, thank you.